And in our top business story, an initiative among local banks to bail out small and medium-sized enterprises has helped to restructure some 7 billion dirhams of debt owed by more than 1,700 companies this year. According to the UAE Banks Federation, the bankruptcy law approved this month by the country's cabinet is another measure that will help struggling business owners restructure debt, reducing the temptation to leave the country. His Excellency Abdulaziz Al Ghurair, the UBF chairman and chief executive of Dubai-based Mashriq, said that the initiative is to rescue SMEs, involved all banks, and came after a meeting of the heads of the 49 banks that are members of the federation. Al Ghurair added that SMEs make up 90% of non-government GDP. The lack of insolvency regulations during Dubai's credit crisis between 2009 and 10 led to a number of businessmen being detained for unpaid debts, with many fleeing the country to avoid arrest. Some small business owners have fled over the past 2 years, leaving behind debt. Mr. Al Ghurair said in November that small business owners who had skipped town had left about 5 billion dirhams of unsettled loans. But in May, however, Mr. Al Ghurair said that the potential fallout from rising levels of SME bad debt had been contained as banks work with business owners to restructure debt. The council is not scheduled to meet until the third week of October, but the law, which will give protection to companies, their directors and employees in cases of insolvency, could be passed before then if it receives a presidential decree. Abu Dhabi could expand its Sweihan solar project to well over 1 gigawatts after record low bids were submitted on Monday. Abu Dhabi Water and Electricity Authority's procurement arm received 6 bids for the upcoming 350 megawatt solar photovoltaic plant in Sweihan, with the lowest bid at 2.42 cents per kilowatt hour coming from an Asian consortium. A local firm bid second lowest at 2.53 US cents per kilowatt hour. While the local figure is 16% lower than the record lows reached in Chile last month, a whole new offer was put on the table from the Asian consortium. The consortium submitted an offer to expand the plant to 1,170 megawatt at an offer of 2.30 cents, according to local reports. The submissions, however, do not mean that the project has been awarded, as authorities will now evaluate the proposals to ensure toughness or thoroughness and economic viability. The UAE's solar sector has been at the forefront of the industry for a number of years after a winning bid of 5.84 cents for a 200 megawatt phase of the Mohammed bin Rashid Al Maktoum Solar Park in Dubai significantly discounted the price of solar, which at the time was considered normal at about 8 to 9 cents. In June, there were new lows in Dubai at 2.99 cents for 800 megawatts. And Emirates national oil company Enoc announced on Monday the expansion of its Jebel Ali refinery facility by 70,000 barrels a day at a cost of more than $1 billion. The expansion, announced in a statement, represents a 50% increase in refinery capacity and is to be completed by the fourth quarter of 2019. The facility, which was built in 1999, was last expanded in 2010. The project expands the facility to 210,000 barrels a day from the current 140,000 barrels a day, consists of 3 separate packages, with the cost estimated to be in excess of $1 billion. The main package includes adding a new condensate processing train and additional processing units. The other packages involve the construction of storage tanks and a 31,000 square foot warehouse. Enoc's vice chairman, His Excellency Saeed Al Tayar, stated that the project was ambitious but key to the energy infrastructure sector to meet future demands and support sustainable growth in line with Dubai Plan 2021. Emaar Properties has listed a $750 million sukuk on Nasdaq Dubai, the region's international financial exchange. The listing has raised the total value of sukuk listed in Dubai to $45.55 billion, which, according to the exchange, underlines the Emirates' position as the world's largest sukuk listing center by value. A $500 million sukuk issued by Emaar Properties in July 2012 is also listed on the exchange. So far this year, Nasdaq Dubai has listed 14 sukuks with a total value of $10 billion. Last week, ratings agency S&P said that corporate and infrastructure sukuk issuance in the Gulf region and in Malaysia has continued to stagnate so far this year, and this may carry over to the coming quarters. The ratings agency said that despite the slump, essential infrastructure funding requirements, low interest rates, and investors' appetite for Islamic assets in their portfolios continue to be supportive for the world's core corporate sukuk markets. In the GCC, corporate and infrastructure sukuk issuance totaled 2.5 billion dirhams, $2.5 billion in the first 8 months of 2016, compared with $2.3 billion for the preceding 8 months. When compared to the same periods in 2013 and 14, issues are down sharply from $5 and $6.5 billion, respectively.